Welcome to the Bishop Cross-Border Investment Services podcast. I am Stephen Bishop, and I'm here today with my associate Lee Scully. And our topic today is common mistakes regarding retiring from the U.S. to Nova Scotia, Canada. So, Lee, what do you think? What do you see the most these days that come up in conversations with inquiries regarding moving to Nova Scotia? What do you think would be the top items of what to avoid in the common mistakes category?
Good question. There's quite a few to look out for.
I know there's quite a few.
Yes.
What would you say the top ones are?
The top one, it always comes up in typically the initial conversation when someone reaches out, because their first question or questions are typically about, how do I get my assets or my accounts to Canada? How do I move them to Canada? So in their mind, or some of the advice they might have received from friends or from old advisors might have been to cash out their accounts and actually bring everything north. That can be a mistake.
That's probably the number one common mistake, where they've already cashed it out.
Exactly. And the reason we would call that a mistake is because, A, that would all be taxable, treated as taxable income in that same year if it's a registered account, right? Like an IRA, a 401k, a Roth IRA, 403b, anything like that. And it's also subject to a 10% penalty unless you're older than 59 and a half. So if someone's 40 years old and they've got a significant amount of money in an IRA and they are told to liquidate that before they move, that's a mistake, because there's a lot of tax planning that can be done. If they don't need the cash, that can still stay tax deferred and investing and growing for the long term without a tax drag on it. So a lot of people don't know that. So that's a very common mistake that we try to help most people avoid if they can.
Yeah. What other types of things would you say would be up there on the mistakes list?
I think a key one, and I get a lot of questions about this too, is not understanding the tax filing obligations. So we're not tax accountants. We can't provide tax advice, but we typically get the same high-level questions, and some people that I've met have moved to Canada, let's say 10 years ago, and they've only ever filed a Canadian tax return since being here, but they're still a U.S. citizen. So technically, if they're a U.S. citizen, Canadian resident, they will have tax filing obligations on both sides of the border, 2 tax returns, regardless of whether they have income on either side or both sides. They still have to file a return. The U.S. can be very punitive if you miss that. There are programs for getting back up to speed and rectifying that problem, but it can be very expensive and very punitive on the IRS and U.S. side, especially if you're not filing your taxes properly. That's one that people miss. I've seen some pretty unfortunate situations with people just weren't aware or didn't understand that they have obligations. But the main thing to know and to consider is that Canada will tax its residents on their worldwide income, right? And then the U.S. will tax its citizens, regardless of where their citizens live. It could be anywhere. So those are 2 tax filing obligations that a U.S. citizen living in Canada will have. Yeah,
exactly. What kind of mistakes do people make with these 401ks? Do you see any of that in your work where someone chooses to maybe even cash those out?
Sometimes where they might not know, let's say they leave an employer because a 401k is an employer-sponsored account. They might think that they have to cash that out, especially if they're moving and they want to consolidate everything. You don't. You can roll that into an IRA. You could even technically keep it as a 401k. If it's the right thing to do, you'd need the tax advice on that. I think one mistake I do see is that people will tell me they have a 401k and they'll talk about what's inside of it in terms of the investments. And these people might be near retirement or already retired, but their investments do not reflect that. So their 401ks might be from an employer they worked for years and years ago, it might have been parked in an S&P 500 index fund, which is technically quite high risk for someone who's at retirement and needs to have a stable income and be able to rely on their assets and not tolerate these large dips that can happen in the stock market, right? So I think the mistake some people make with 401ks would be forgetting about what's under the hood and forgetting to think
that's
about
a very good point.
Think about the risk exposure they have, because they forget about it. It's often a long past employer.
It's like a pension, and they just take it for granted that it's just something there that someday they'll draw on.
Exactly.
And not really think too much about what's in it.
And worst case scenario, they're fully stock market exposed. The market takes a crash, and that's the wrong timing because maybe they start to need income at that exact time. That would be quite unfortunate.
Yeah. What about, do we see much about the residency issues when people are moving and they haven't established permanent residency? Maybe their spouse is a dual citizen, and they've moved here and they've actually bought a property, but they haven't received the residency yet. Can you talk on that one? Because we see that every once in a while.
That one can be tricky. So if there is a spouse that's a dual citizen, so they have Canadian citizenship, that's often a good thing because they can sponsor their spouse to get their permanent residency and then eventually citizenship and everything else. And again, this is something that has to be done on a case-by-case basis, and certain legal questions and tax questions have to be asked of other professionals. But there are times when maybe that couple wants to buy a house in Canada. They need to think about whether they put it in the dual citizen's name or the U.S. citizen who's not a Canadian citizen's name. Sometimes you can and can't do certain things. Sometimes there are tax implications of doing things a certain way. We don't advise specifically on that, but we coach around how to ask the right questions of the right people. Exactly.
Like for instance, if you're a U.S. citizen and you buy a property in Nova Scotia and you don't have your permanent residency yet, if you don't get your permanent residency within a specific time frame, there'll be an additional tax on that property, is deed transfer tax in Nova Scotia. And sometimes we've had clients who have gotten into that not knowing that was something they should have investigated first. They just assumed, oh, well, we could just buy the property and just move, and there'll be no issues with that, but yet didn't consider the time it was going to take to get the permanent residency. And then the permanent residency timeline goes past the allotted time that the province allows, and they get a tax bill for the deed transfer tax.
And that speaks to another common mistake, which is not planning early,
not
planning in advance. Some people move here and then start to sort things out. There are so many different, as we've discussed, there's so much overlap with immigration law, tax considerations, legal considerations, things like real estate. It's not something that you can just figure out overnight. If you've got a year or two before you move, sure, that's actually great because you can probably get your ducks in a row in time. And then everything's optimized. You're not going to make any mistakes if you ask the right questions, get the right advice. So backpedaling to your first question, that's a mistake too, is just jumping here and thinking it'll all work out. That can be problematic, and you want to start planning very early.
Move first, ask questions later. It's a bold strategy. That's the bold strategy. So, even though we don't provide specific advice on a lot of things like that, we do have from the experience over doing this for so long, we do have the stories of what other people have encountered.
Yep.
And we can say, oh, by the way, you should look into this. Before you move. You should look into this before you move.
Yeah.
Thus avoiding one of those, mistakes that we're referring to. So
yeah, we have the experience with those stories. We have the connections.
Then the connections to refer people to get the right answers, and from the people that are licensed to provide those answers. Most of them are tax
And there's not a lot of those people, right? Because this is a very niche.
It's a small world. It's a small world when it comes to this. Yeah, that's exactly right. So, okay, well, that kind of covers it in a brief nutshell. But for more, if somebody wanted to go more in depth on this topic, they can reach out and contact us and have the bigger conversation and ask more individualized, specific types of questions regarding, okay, what do I need to know? And then start doing their homework and make a better move.
Absolutely. So start early, ask questions, and I'm sure we'll get the right information.
Yep. So that's it for today, and stay tuned and watch for upcoming podcasts on other interesting topics that may be valuable to you.